Clifford Bennett, Hurston Economics. A lot of news out over the last 24 hours. It's all good. I know Dow Jones was down a smidgen, S&P up slightly, but the price action, the intraday price action in US markets was again very strong. You know, this market just keeps rallying, just keeps clinging to highs. People talk about volumes being low and how that's indicative of a top, and watch out, there's going to be a correction. They've been saying that for a year now. Look, there's not going to be a correction. If there is a risk in the market, it is that it accelerates to the upside. The reason volumes are low is because no one wants to pay these prices, but they're there on the bid the whole time because they have to pay these prices. So any sort of consolidation is going to be very slight, shallow, to the sideways, and then higher. In terms of events around the world, Obama gave a speech about the US deficit. You know, it's going to be something like $1.4, $1.6 trillion over the next 12 months. To give you an idea of that, that's 10.9% of US GDP. That's worse than Greece over the next 12 months. It's also worse than Japan. It's worse than the UK. Germany, 3.7% of GDP will be their deficit this year. US, 10.9. So the United States, you know, they talk about the deficit coming down to 3.2% in 2013, 2015, those sorts of years. It just isn't going to happen. You know, they say this every 5 years. They have this 5-year plan to reduce. It isn't. And it says everything about the outlook for the US as an economic leader in the world, and it says everything about the outlook for the US dollar. US dollar is going to continue to dive on this. William Dudley, US Federal Reserve Chairman for New York, come out overnight and say that their quantitative easing too is rescuing the US economy. What a load of nonsense. It's being rescued by the consumer and global growth. But you know, they have to justify bonds for boys. So it's another little bit of more rhetoric nonsense out of the US. Meanwhile, China, 37.7% increase in exports. The trade surplus dropped something like 53, 54% because they imported a lot prior to the Lunar New Year. Japan, everyone's talking about a 1.1% contraction. That's annualized. You know, over the quarter contracted about 0.3. Over the year, growth was strong for Japan, and it's going to uptick in this quarter as well. So the outlook for Asia remains incredibly strong. The outlook for the US remains strong for the economy, but because of private enterprise, because of individuals, not because of the gooses in government and central banks there. So overall, what this means is very bullish equity markets because the US dollar will continue to fall, support the US economy in its long-term structural struggle, if you like, which I don't really see any great end in, but they'll have good profits. In terms of markets generally, look, the Euro's had another little bit of sell-off. It's going to be a bit tricky here for a while. I think we might have seen a fair bit of the currency action for a while, but you still buy the dips. The Australian dollar is still a standout buy and still looking for much higher levels in gold. Gold looks particularly good. Have a great day.